Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corum and Ed Carson here with a breakdown of the action in today's session, where we saw another day of strong gains for the major indexes and some potentially actionable names as well.
Yeah, there was a lot of great action today. Closing at session highs, Apple broke out, Dutch Brothers surged, and Marriott also cleared an entry point.
All right, we'll take a look at those. But first, let's analyze the action in the major indexes today, with the NASDAQ up 1.8%, followed by the S&P 500 up 1.2%, and the Dow up 1%. Also, small caps had a nice day of outperformance at up about 2.5% by the end of the day. So yesterday's close, I think we were about 2.5% below the 200-day line for the NASDAQ. So now awfully close to that key level, and also surpassing some prior resistance too.
Yeah, I mean, a couple of weeks ago, the idea that we would get up to the 200-day line, that just seemed like fantasy land. That's weeks, months off. And it's just amazing how the market has changed. Yeah, we got above our February highs on that in the S&P and the Russell, they all did. Yeah, the 200-day line very much in play. Coming in here, that's another resistance area. It wouldn't be surprising. Of course, I've been saying this for a while now, to see a pause for a few days, weeks. That would be, you could be a positive either here or just above the 200-day line. Let some stocks form handles, maybe pull back to moving averages, just something like that. But we don't know if it will. And it's certainly been a really good ride. And hopefully investors have been gradually expanding exposure to take advantage of this rally.
Exactly. I think that's a key point, Ed. There's a reason why we want to be starting to add exposure on follow-through days. And, arguably there were stocks in playable groups during the middle of the correction. A number of the cyclical areas were going counter to what the NASDAQ was doing. But at the very least, even if you wanted to sit out during the correction, as, the traditional rules per can slim state, starting to add exposure on that follow through day, and then continuing to ramp up when things are working can help get you out of your own head if you are thinking there is just way too much doom and gloom. Heck, even technical indicators saying if we're at overbought levels, we've blown past that. So yeah.
I mean, and I would say there's a lot of things like it's not a fairly broad-based rally. We still don't know which stocks or sectors may lead. Energy stocks looked like they were going to really sell off today, but they came well off their lows. They're still looking pretty strong. Seeing a lot of different sectors, showing some positive action. So, we'll see if that shakes out if we go back to a narrow leadership as this rally goes on. But it definitely suggests that you want to be taking part in this market, but also trying to keep that exposure diversified among strong stocks in a variety of sectors to make sure you're taking advantage and you don't get whipsawed in a various sector.
Exactly. And as always, remaining flexible, because we could see resistance here at the 200-day line. There could be a headline that could hit the market very hard. We don't know. We got to be prepared for that. But that can't scare us out of staying on the sidelines. We have to be able to put some money to work when and where appropriate. Let's also take a look at the S&P 500 as well, clearing some key levels here, not only the early February highs, but also getting back above that 4,600 level. But a pretty strong close here for the major indexes too. So not only clearing resistance, but finishing strong.
Yeah, that's been a really nice bullish trade after having so many weak closes on the way down. And really, the S&P doesn't have much more in the way of resistance. I mean, there's other things, the NASDAQ, some other ones do, but not really a whole lot left. I mean, it's got to get up to all-time highs. So it's a really remarkable comeback.
Yep, and we now have the 21-day above the 50-day line, which looks like it could soon be flatlining, which we need to see in order for it to then start turning higher.
Yeah, we're definitely switching from a power outage toward a power trend. We're not quite there yet, but man, we are really trying to make a rapid turnaround there.
Yes, we are. And next, we want to take a look at the Dow briefly, above its 200-day line after getting potentially some resistance under there for the last couple of trading sessions. Looks like perhaps the next stop is its February highs right around 35,800. And then taking a look at the Russell 2000 with the IWM ETF, a big day it looks like for small caps. Ed, what does this tell you?
Well, it shows you the breadth in the market. I think Ken Shreve, just before the show, was sending out some messages. Advancers were leading by 3 to 1, 6 to 1, depending on the exchange. It was a lot of gains. This is not the rally from from much of 2021, where a handful of stocks was leading the way. This market is moving with a real breadth right now.
That it is. Okay, and shall we take a quick look at the 10-year yield down a little bit? Is that at all impacting, you think, what we saw moving today? Or is it just, taking a step back and looking at the broader trend up? Today didn't really change the trend at all. Seems like the market is, if we are seeing a leadership broadening, kind of brushing this off for
Yeah,
now.
it's brushing off. I mean, it's not too meaningful. It's still well above its 10-day line, as we say, so
Right.
it certainly hasn't broken a trend. I will say that the 2-year yield, which we don't have on Market Smith, is that actually briefly inverted. That was briefly higher than the 10-year yield intraday. It did back off a little bit. That can be seen as a sign of slowing growth, recession concerns. The Fed says, hey, we're not looking at that particular spread, something else that isn't as concerning yet. But that's one thing that the bond market is potentially signaling, sending a mixed message. But yeah, nice to see this come down. But the market, it's remarkable how it's just sort of powered through the rising yields.
Yes. All right. And Apple adding to its win streak, now at 11, up 1.9% today. So many up days here in a row. We talked about not only the early entry, maybe you did cheat a little bit with the trend line, taking out that high there of 176.65, and got in right when Apple got above the 50-day line. I was getting in right around there. But
Nice job.
say you wanted to wait for that official trend line to clear the following session. So that was right around the early entry for this stock. But before today, we were seeing a double bottom on this chart. So I could just draw. Whoa, if my mouse will cooperate here. My brain is moving faster than my hands. But we do see a double bottom entry perhaps, although we like seeing some sort of shakeout before a breakout, but that doesn't mean we're going to get that. So what do you think about the potential entry here today over that 177-ish area?
Yeah, I think that's the buy point. I mean, I think that's the buy point. I mean, I know that Market Smith changed around, but it looks like a double bottom to me.
Mm-hmm.
But yeah, after 11 straight days, it could easily pull back. That doesn't mean it has to pull back much. It could just pull back 0.5%, 2%. It could pull back, form a handle that's 7% deep. I would like to see that, kind of thing.
Mm-hmm.
That's one reason I didn't jump on the early entry either, just because because I was waiting for a pullback, but it doesn't always happen. This could go up to 200 and finally pull back. And it's like, well, at that point, I'm not a small handle isn't going to get me in. So it's just always about playing the odds. I mean, it's like, I think that trend line break, that was a great place to buy it. I think now it's like after 11 days, again, this is one reason why if the market could just pull back a little bit, that would be really nice. But, if the market's not going to do what you want, at least going straight up is pretty nice.
Yeah. And Ed, I think we've seen this with some other buys, like Eli Lilly comes to mind, completely different business, of course. But that was one when it was carving the right side of its base that I was even thinking, all right, let's see it, pause here, take a breath, form some sort of handle. And it didn't want to do that until after it broke out to new highs, and it wasn't up 11 days in a row, but didn't have very many down days in this advance on the right side of the base.
And that sometimes happens. I mean, there's the expression, Bill O'Neill, that says you can't kiss all the babies. And one reason is because you can't buy everything. You have to play the odds and say, well, you can make a decision. I can understand why people bought that either today or on the early entry, or others, like myself, said, you know what, I'm waiting for that pullback, and that pullback didn't happen. And that can happen. And that can work either way.
Exactly. Well, let's take a look at an interesting move today in the retail restaurants group, coming from Dutch Brothers, up over 12%, and some strong volume. So, if you take out, rewind to, before the earnings report here for Dutch Brothers, yes, the stock has shown it had the potential to go on some little runs here, but overall underperforming the S&P. Maybe it's starting to turn a corner. There's a lot of interest in this stock, and it was definitely a setup today that caught our attention.
Yeah, and there was an early entry in the morning, and boy, I thought long and hard about buying it when it broke this downtrend. But then the market seemed to back off. And so I was just like, okay, I'm just going to wait on things. So when it broke that downtrend, when it was up, you could have bought it then, but it did. There is, we basically are calling a cup with handle within this large consolidation. You sort of start with that 63. That's the beginning of your cup. And you have a handle here. So I believe the buy point was 62.11. It's still in buy range from there. You can still buy it off of that. And you were talking about underperforming the S&P. Well, if you do look just within that cup, I mean, the RS line is now at its highest level. It's above the high of the consolidation. It's the highest level price since November.
Mm-hmm.
So it is turning higher in that regard. Stock. This was our stock of the day. There was a lot of positive action on this one. A lot of volume, a lot of interest in this.
Yeah. So perhaps coming back to life, if it could close this week above its February high, I think that would be positive. And then it seems like the next big hurdle would be for it to clear 80, that peak from its IPO run. Our friends at the life cycle trade call that the turbulence zone. So, maybe Dutch Brothers is in the early stages here in this institutional due diligence phase, so to speak, but an early entry that is compelling, no doubt, here today as it looks to expand, to different areas. And I know where it originated is an area you are very familiar with, Ed, in
Well, not
Oregon.
very familiar with. It's very close to where my folks live in Southern Oregon. But yeah, they've really expanded rapidly, and that's the real story. I mean, their same store sales growth is fine, but they're really expanding their stores, and that's always with retail. That's the traditional. That's when the big moves are made when
Mhm.
they're ramping up sales from that.
All right. Well, is the reopening play back on? We've been looking more at some travel and leisure names like Marriott, which finished strongly today, up over 3.9%, almost 4% here. Didn't quite have above average volume, but it definitely has picked up over the last couple of sessions after the stock tightened up.
Yeah, it was trading pretty tightly for a couple of weeks. It basically formed a handle. This was a really V-shaped consolidation. We saw there was some other stocks in the travel space. Basically took a vacation, as it were, because of the Ukraine war and surging crude prices, which may not affect Marriott directly, but if you're flying somewhere, those fares and whatnot, and just maybe you don't want to go to various destinations, and the handle there or what have you was right around the old buy point. So there was some reasons to think about it as being relevant. I just to say full disclosure, I took a position in this, about a 3/4 position today, because I just been eyeing it,
Yeah,
and we'll see.
exactly.
But so that I've been looking, it's not the prettiest space. I mean, just to be clear, it's not, and I can certainly see why. Whoa, I'm going to wait for a better looking chart. But I think there's nice actions here. Again, it depends on the trends, the headlines. If crude oil goes to 140 and Ukraine war spreads or even gets worse, all of a sudden, yeah, travel names are going to suffer. So are a lot of other stocks. But so this is why I'm not going to put all my money into travel stocks, just like I'm not going to put all my money into oil stocks or all money into any kind of particular sector.
That's right. And, we often talk about how beneficial shakeouts can be. And, yes, a V shaped cup or cup, cup with handle on a daily looks like a nice support week on the weekly chart here, Ed. So shaking out perhaps a lot of weak shareholders there. And I think it pays to continually screen stocks and keep your watch list fresh because you were prepared for this setup. We look at a lot of stocks every day on IBD Live, and so I think one of our goals is not just covering stocks on the move today that are potentially actionable, but helping keep those watch lists fresh.
I think that's a really good point, because you don't want to just be like, I mean, if I just looked at this without thinking about it, like looking at the numbers, I mean, I probably would have passed on it, or just about anything. You want to spend that time looking at it and really, especially with the market being an uptrend, getting a big watch list and then honing in on some that are close to being actionable or are actionable, and doing your homework on that. So when it hits your triggers, you're ready to go. And yeah, as opposed to making an impulsive decision or a decision without much information.
Very true. All right, Ed, thank you so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So we hope you join us, investors.com/IBD Live. And then we'll be back right here after the close tomorrow. So we'll see you then.